Hello and welcome again to our personal finance series. In previous videos, we discussed what is a personal balance sheet and we created personal balance sheet that can be easily accessed, viewed, and edited on your mobile phones. In this episode, we will discuss a bonus personal finance report, and we will call it Personal Finance Dashboard. This dashboard will show the important ratios, balance sheet items, and visual graphs about our financial status. What is a dashboard report in the context of personal finance? A dashboard report is a visual representation of your essential financial data that allows you to quickly gather vital information about your financial status in order to make informed financial decisions. I have created a simple personal finance dashboard based on the personal balance sheet that we created in our previous videos. At the very top, we have the name of the reporting entity or individual, and the date of the report. After that, I have listed the most common assets that we usually need to monitor. Number 1 is cash. We need to know every once in a while our cash balance, especially when we are thinking of taking financial decisions and actions. Second is the marketable securities. We monitor the value of our investments. Is the cash position too large in relation to the marketable securities? Are we risk-averse in not investing excess cash, or maybe we are reluctant to invest because of a bear market? How about the opposite, if the marketable securities are substantially high with low cash balance? Is there a bull market, or are we just risk-taker by nature? Third, how much is our current liabilities? Is our current cash able to cover the current liabilities? This will be answered by the cash ratio. The cash ratio is the ratio of cash to current liabilities. Here we get 2.41, which is 123,000 cash divided by 51,000 current liabilities. In general, a cash ratio equal to or greater than 1 indicates a company has enough cash to entirely pay off all short-term debts. A ratio above 1 is generally favored, while a ratio under 0.5 is considered risky as the entity has twice as much short-term debt compared to cash. On the next portion, we see the total assets, liabilities, and net worth. A summary of the balance sheet. The debt-equity ratio is the ratio of total liabilities to net worth. It shows how significant is your total debts in relation to your net worth. Here we get 0.35, which is 292,000 total liabilities divided by 831,400 net worth. The optimal debt-to-equity ratio depends on your financial goals. Generally, it should not be above a level of 2, which means debts is twice as much as net worth, or liabilities is equivalent to 2/3 of total assets. But it depends on your priorities. For example, a couple starting a family purchased a residential property to serve as their family home through house loan. They can have a debt-to-equity ratio of more than 2 and may drain most of their cash for the down payment of the house. But as they pay the house loan over the years, the bank loan is decreasing, their equity portion to the value of the property is increasing, hence the debt-to-equity ratio is decreasing. A low debt-to-equity ratio generally means good financial position, but it can also indicate you are reluctant to take liabilities or leverage loans to attain financial goals. It really depends on your risk appetite, income stream to service debts, and financial goals. There are so many other financial ratios we can get from analyzing financial statements such as the balance sheet, but here I have picked up the 2 most common and important ones, in order not to overwhelm the user. When we go back to the balance sheet that we created in our last video, we can see the ratio of items to total assets. Current assets to total assets ratio indicates your liquidity position. Total liabilities to total assets ratio, and net worth to total assets ratio. Going back to our dashboard, the third portion is the composition of our assets. This shows how assets are allocated to different categories. The blue bars are current assets and the green bars are non-current assets. So that is the summary of the personal finance dashboard that I have created. Any updates you make to the tables in the Assets tab and Liabilities tab will be reflected in the Balance Sheet tab and Dashboard tab in real time. For example, we have 710,000 real estate properties now. If we sell the condo, we delete it from the Real Estate Properties table and delete the related debts. Value of 300,000 less 109,000 mortgage, current and non-current. We have 191,000 less 5,000 agents' commission and other expenses. For example, we have net proceeds of 186,000. Let's add the proceeds of the sale to cash 186,000. We can see that our cash position grew in the Balance Sheet tab and Dashboard tab, and the real estate properties shrink. The cash ratio and debt-to-equity ratio likewise changed. So these are the things that we can consider while analyzing our personal finance dashboard. This will gauge our financial status. And when used with other financial statements such as the balance sheet and income statement, we can craft a good financial plan before taking concrete actions. The file is available in the description comment below. You can duplicate the file and update for another period, monthly, bi-monthly, weekly, depending on the frequency of your choice. I would recommend updating monthly since we pay our loans monthly, get our credit card statements monthly, among other reasons. Don't forget to like, comment, and subscribe to our channel so that you will be notified of future videos about personal finance. Thank you.